All right, we can all see the PowerPoint. Mhm. So this is basically the um, sort of the journey through chapter 3. We've been analyzing transactions, and the first thing we do is we record them in the journal. So for this particular chapter, as you know, was dedicated toward showing you how to handle all the events that happened to Sierra Corporation. There were a series of 11 events, as you know, from Learning Objective 1. And we went ahead and did the journal for 10 of those 11 because one of those events was not deemed a transaction. The hiring of employees is not deemed a transaction, but all the other events were transactions. So you see them. Listed here. So again, the very first thing where accounting is recorded is in the journal. This is what a journal looks like for Sierra Corporation. This is the start of October. This is the end of October. This is all the information, all the activity that went into the journal for Sierra Corporation. Okay. And then as your homework, you had to go ahead and post all of these into the ledger. And if you remember from last class, when we went ahead and posted all of these into the ledger, again, this is just a snapshot of but all these would be very separate pages, very separate sections in the ledger. But they're sort of all bunched here together to show you on one slide what the ledger would sort of look like. Again, the asset accounts are listed first, right? The cash account is listed first. The supplies account is listed, prepaid insurance and equipment. So the asset accounts are going to be listed first. And then, of course, because these are asset accounts, their balances are going to be on the debit side. And that was another exercise we went through. What's the balance in cash? And as we learned last time, we would say that cash has a $15,200 debit balance. Debit balance because it's on the debit side. Remember, there's two sides to every account. Debit side is the left side, credit side is the right side. So this is a debit side balance. Okay. Same with supplies, same with prepaid insurance, same with equipment. All asset accounts will have normal balances on the debit side. Okay. And then the liabilities are listed here: notes payable, accounts payable, and unearned service revenue. There are 3 liabilities. Liabilities have normal balances on their credit side. They actually increase on their credit side. That's where their normal balance is. So notes payable has a $5,000 credit balance. Accounts payable has a $2,500 credit balance. Unearned service revenue has a $1,200 credit balance. So all of these 3 accounts are liability accounts, and they all have credit balances. Notice, like I was saying, when we looked at the the ledger for the very first time, the ledger has an order in which they list the accounts, right? Asset accounts are always listed first. And then we have liability accounts are listed second all the way to here. Okay. So asset accounts are going to be listed first, just in the same order they would be on the classified balance sheet that we learned in chapter 2. And then your liability accounts would also be listed the way they would list on the balance sheet. Okay, classified balance sheet. So that's part of the second listing. The third set of accounts that are listed are the stockholders' equity accounts, which end in dividends. And common stock is a stockholders' equity account, and so it has a normal balance on the credit side. Dividends, as you know, takes away from the equity of the company, right? It reduces retained earnings. So to reduce a stockholders' equity account, that balance has to be on the debit side of the account. The next group of accounts that you'll see in a ledger would be the revenue accounts. This company, it's easy. They only have one revenue account, but as you know, companies can have multiple revenue accounts based on what they do, what goods that, they sell or what services they provide might be very different, and so they could have revenue accounts, more than one revenue account. Okay, here it's a simple service revenue account for Sierra Corporation. Service revenue is where the profit of the company comes from, right? Revenue is the source to cover all the expenses, and what's left over from that revenue is the profit. Profits increase retained earnings. And so service revenue is equivalent to increasing retained earnings. And so it's a credit side balance. Mhm. And the last set of accounts that you will see in any ledger would be the expense accounts. And expense accounts, of course, have the opposite effect of revenue. Expense accounts take away from that revenue, from the profits. So expense accounts have normal balances on the debit side because that's how we lower retained earnings, from the debit side. So here we have salaries and wages expense and rent expense. As you see, they all have debit balances. Okay. Now that we've done all of this work by posting to the ledger, we now have all these balances. See, assets have debit balances and the liabilities have credit balances. Common stock has a credit balance, dividends has a debit balance, revenue has a credit balance, and the expense accounts have debit balances. How do we know that the ledger is balanced? Well, to know the ledger is balanced, all the accounts that have debit balances should equal all the accounts that have credit balances. And so that's going to be the focus of today's lesson, which is learning objective 5. That's exactly why we use the trial balance. Yes, the trial balance is to make sure that the accounts that have debit balances equal the accounts that have credit balances. And so that's the lesson today. So I'm going to move on to learning objective 5 here, which is to prepare the trial balance. Okay. And again, the trial balance is simply to make sure that our debit balances and credit balances equal. So here is the trial balance for Sierra Corporation based on the ledger. These accounts come directly from the ledger that we just looked at. Okay. And you see the ledger started with cash, right? The asset accounts were listed first, liability accounts were listed second, et cetera. All of this list simply is from the ledger. As you see them listed, assets, liabilities, stockholders' equity account, ending in dividends, revenue and expense accounts, that's how they'll be listed in the ledger. That's how they're listed in the journal, because the in the trial balance, because the trial balance information comes right from the ledger. Okay. This is on page 119, by the way, page 119. I shortened that one there. And again, and this is what it shows. Now, again, cash, supplies, prepaid insurance, and equipment, the asset accounts have debit balances. So there's only 2 columns here, the debit column and the credit column. So if an account has a debit balance, you would put it in the debit column. As you know, the liability accounts and common stock account have credit balances. So those balances would be put in the credit column. Dividends takes away from that, so it's in the debit side. Service revenue is a credit side balance because it's where the profits are for the company. And of course, the expense accounts take away from that, so they're on the debit side. Once you list all the accounts and their balances in the proper column, you're simply adding things down. What you want to see is that your debit balance of $28,700 will equal your credit balance of $28,700. So all of the debit balances added together equal all of the credit balances added together. And that's basically a trial balance. This is basically how we're going to be wrapping things up. Not that bad. There's no additional work. You're just looking at the ledger, making sure you have these accounts in the proper order that they would be in the ledger. making sure the balances are in the right spot, the debit side or the credit side, adding them up, they should equal. Okay. If they don't equal, you might have made a boo-boo. Right? You might have put a balance on the wrong column. Or if you still get everything right, then there still might be other errors to look for, like a posting error. Okay. So there's ways in which we sort of backtrack. Okay. So trial balance isn't the be all end all of everything, but it is a very, very important exercise that we do to make sure that the general ledger is balanced. So here is an example in your book. If you want to turn to the next page, 120, page 120 here in your book, you will see the do it exercise for a corporation called Snogo. And basically, these are a whole bunch of accounts from the ledger. The sad thing is that it's not put in the proper order. And this wouldn't necessarily happen in real life because we would simply look at the ledger and the ledger would have the proper order. So we wouldn't be guessing all this stuff. But the way the book is here, they want to make sure you understand assets are listed first in balance sheet order, then liability accounts, then stockholders' equity accounts ending with dividends, then the revenue account, then the expense account. So they just basically want to say, look, can you put together a trial balance in the order it would be in? Okay, and so they're simply mixing up all the accounts here. But that shouldn't be a problem for you because you know your asset accounts by now, right? You know that equipment is an asset. You know that accounts receivable is an asset. You know that cash is an asset. You know that prepaid insurance is an asset. So you know what asset accounts are there. You can identify the asset accounts. And then you have to think about chapter 2. What order would they be in the classified balance sheet, right? Certainly cash would be first. Accounts receivable would be second. Prepaid insurance would be third, and equipment would be fourth. So this is how they want you to think when you're solving these types of problems in the book. And once it's all done, of course, that would be the exact order you would see them: cash, receivables, prepaid insurance, and equipment. All of these are asset accounts. All of them have debit balances. You would identify 3 liability accounts: notes payable, accounts payable, and salaries and wages payable. Liability accounts have credit balances, so all of those accounts, again, they're right here: accounts payable, notes payable, salaries and wages payable. They'd be listed in this particular order on the classified balance sheet. So if you look back at chapter 2 of the classified balance sheet, this is the order you would find them in. So that's the order they would go in. Then you would have your stockholders' equity account ending with dividends. There's only there's only one stockholders' equity account, common stock, and then you would add throw the dividends on underneath that. Common stock has a credit side balance. Dividends has a debit side balance, as you see here. Then your revenue account would be listed. Revenue has a credit side balance. And then your expense accounts. Now, normally speaking, and there's 2 expenses here, right? Salaries and wages expense, utilities expense. The expense order would be given to you from the ledger. So I wouldn't be nitpicky in terms of what the order would be here, as long as you know the expenses go last and they all have debit balances. And so when you add up all your accounts with debit balances, you get 158,000. When you add up all your accounts with credit balances, you also get 158,000. So you have a trial balance that, in essence, proves that your ledger is balanced. Okay. So I'm coming back to our main screen to ask if there's any general questions on that.
What if there's no balance in the ledger?
There always would be. As soon as you start putting journal entries in, those journal entries are going to be posted to the ledger accounts. and that would be the balance in each account. So even if there was a minimal number of entries, whatever accounts were affected by the entries would have a balance um, in the ledger. If you didn't do any accounting, obviously there wouldn't be any balances anywhere. But then you probably would need to hire someone to fix that.
Ha ha ha.
Aha, yeah, exactly. So I would suggest that. Let's take a look at Wiley Plus. Want to show you a couple of things here. So first of all, you might notice that you have some new assignments that are open. Can you all see the Wiley Plus screen, by the way? I hope that's a yes. Yes.
Yeah, we can see it.
Okay, I have everything closed here, so thank you. So what I have here is the Chapter 3 Learning Objective 5 quiz opened, which basically is just understanding the trial balance as we just looked at it. But as you see, based on the entire chapter that we did, this is pretty light type of work compared to all the other stuff you had to do. So I actually gave you a review problem, which is basically the entire chapter in one problem. Okay, so what do I mean by that is this particular problem has transactions for you to analyze. You're going to have to journal those transactions. You're going to have to post them into the ledger, and then you have to do a trial balance. That's what I mean by that. And if you like that a lot, I gave you an extra credit one, because I think the more you practice this, the better you're going to get. So there's an extra credit review problem as well as a review problem. So this one is required. This one is an extra 20 points if you want to do that, added towards your grade. So it's a plus. They're all due by the beginning of next class, because I want to make sure we are ready next class with questions on how this works and a review of this, so I can give you the exam. Okay. The next step is the Chapter 3 exam. So when I see you next class on November 3rd in the morning, all of these would be done and you would have questions for the review. Speaking of a review, if you go to that read, study, practice section, the very first, and I'm going to Chapter 3 because that's Chapter 1. Again, I've been giving you these as reading materials, but if you actually look at the reading content here and you go down to the end of the chapter homework and you click on it, it basically starts with a review and practice. And what I like about this, I'm going to just scroll down a little bit. They have practice exercises for you with solutions provided. I would do the second one here because it actually is a journal. But the whole chapter is also done in the practice problem here. So this is for campus cleaning, campus carpet cleaning. You have transactions to journal. You have a ledger to put together, and you have a trial balance to put together. And this is, again, really good for study because the solution is provided for you. So if you can follow this, it should help you a great deal. So if you have your book and you want to say, okay, well, I don't want to go into Wiley, but I do want to know where it is in the book, it's on page 127. So page 127 has this practice problem in it that you're going to be doing, journalizing, posting, and doing the trial balance. Okay. So I highly recommend it. It's a really great way to study. And so I do highly recommend that you do that as well. Okay. This is the time to sit down and get serious about the bookkeeping piece because it's just starting. We're going to be doing more next chapter.